Hello friends, let us continue with share capital, and in this lecture we are going to start with a very important topic of share capital. Earlier we did one important topic, that was oversubscription of shares, right? And now we are going to do the second important and technical part of share capital. This is known as forfeiture of shares. Is known as forfeiture of shares, right? Now, the first question is, what is a forfeiture of shares? How we do forfeiture of shares? What is forfeiture of shares? This is the first and the foremost question that will come to your mind, right? So let us solve this complication with the help of a practical problem and with the knowledge that we have gained so far through the lectures, right? So keep your minds open. We'll go slow with the forfeiture of shares. It is a bit technical part, right? We'll go slow. Keep your minds open. Let us do an example, right? Company, I'll take a very simple example, okay? Very basic example. Company issued 10,000 shares of rupees 10 each. That is, company wants to raise 1 lakh rupees. They have issued 10,000 shares of rupees 10 each, payable as 3 on application, 2 on allotment, 3 on first call, and 2 on second call, right? So company issued 10,000 shares of rupees 10 each, payable as 3 on application, 2 on allotment, 3 on first call, and 2 on second call, right? Now there is a person X. He is subscribed to all shares of the company. That means all the shares have been allotted to a single person, that is X. This is just to simplify the example, right? So X subscribed to all the shares of the company, right? X paid application and allotment money. X paid application and allotment money. Now, X failed to pay first call. X failed to pay first call. Then second call has not been made by the company. Has not been made by the company. Clear? So this is the question. Write down this example. We are going to solve this practical problem, and through this practical problem we are going to understand the forfeiture of shares, right? We are going to do just the basics of forfeiture in this lecture. Don't worry, right? Just keep your minds open, right? And keep in mind what we have studied so far in the lectures of share capital, right? All that we are going to use here. Now, the company issued 10,000 shares. The person X subscribed to all the shares of the company. He applied for that. Along with the applications, he paid application money. That is what we have studied. He paid application money and he paid the allotment money also, right? So what will be the journal entries for that? Let us do the solution now, right? And try to understand forfeiture of shares. What is the first entry? You receive applications, and along with applications you receive application money. What is the entry? Bank account debit to share application account, right? How much? On 10,000 shares, 3 is payable at the time of application. So I will say 10,000 multiplied by 3, that is 30,000. Clear? So this is the money you received along with the applications. Now at the time of allotment, what you do? You transfer this application money, application account debit, to share capital account, right? 30,000 and 30,000. You transfer this application money, you allot the shares, then you transfer this application money to share capital account. You say this becomes our capital now, and this money we are going to use for the business now, right? Now at the time of allotment, you have called 2 rupees. So what is the journal entry? First, the amount will be due on allotment. For that, the journal entry is share allotment account debit to share capital account. How much? On 10,000 shares at the rate of rupees 2, 20,000 and 20,000. Now the question says X paid application and allotment money. That means we have received this allotment money also. When we have received, we will debit it to bank account. The entry will be bank account debit, and the credit account will be to share allotment account. Clear? How much? 20,000. Now, what is the amount due on first call? The company has called for the first call. Can you tell me what is the amount due on first call? On 10,000 shares at the rate of rupees 3. And what is the entry when you have to make the amount due for the first call? That is share first call account debit to share capital account. How much? On 10,000 shares multiplied by 3, 30,000. Now see the question. He says X failed to pay the first call. That means the company called for rupees 3 on first call, but X, who has subscribed for whole of the shares of the company, he fails to pay the first call. What is the journal entry for this? What is the journal entry for this? Either you will keep this journal entry as such if you remember calls in arrears method 1, where we do not open the calls in arrears account, right? Or you will open the calls in arrears account. I will open the calls in arrears account. There also I told you always prefer opening calls in arrears account until and unless the question specifies otherwise. What I will write? Calls in arrears. I have received nothing in the bank. Calls in arrears account debit. I will close the call account, right? In this case, I will close call account. Remember, calls in arrears method 2, right? How much? 30,000. Clear? Now, this much we have done. This is a very simple problem till this point, right? Now what happens when X has failed to pay the call money? We haven't called for the second call. Second call has not been made by the company. Why I have given you this line, the second call has not been made by the company, I will tell you, right? The company called for the first call and X failed to pay the first call. We posted the entry as calls in arrears account debit to share first call. So calls in arrears to the extent of 30,000 rupees is there in the books. Now what happens is, after this, what will happen? Company will send a notice to Mr. X to pay the money, to pay the first call money within 14 days right after the company has posted this entry of calls in arrears. That means the calls have not been received by from Mr. X. Now what will the company do? Company will send a notice to Mr. X to pay the first call money within 14 days of this notice. Clear? Okay, this notice reached Mr. X. Then what happened? Mr. X did not pay money within 14 days. Mr. X was an oversmart person. He thought that I will take the shares, then make a default. I won't have to pay the money. But what will the company do? Company will first send a notice to Mr. X that pay the first call money within 14 days. Mr. X did not pay the money within 14 days. He ignored the notice of the company. He did not pay the money within 14 days. Now what is the power with the company if the money is not received? What will company do in this case? What the company did? Company cancelled the subscription. The company cancelled the subscription of Mr. X. What did the company do? Company cancelled the subscription of Mr. X. Company says we do not consider it a valid subscription, and again our shares are open. First of all, company wanted to raise, they allotted the shares to Mr. X. Right, Mr. X now haven't paid the first call money. What the company says? Company says we cancel your subscription to the shares of our company. So company cancelled the subscription of Mr. X. This cancellation is known as forfeiture of shares. Forfeiture of shares. Right? Clear? When the company cancelled the subscription, the share subscription of a person, right? When the person fails to pay the call money, any call money, even after the notice of 14 days, then that is known as forfeiture of shares. Clear? What is forfeiture now is clear. Company has cancelled the subscription of Mr. X because he failed to pay the money even after the notice of 14 days by the company. This is known as forfeiture of shares. Now what will company do? Company has received this application and allotment money from Mr. X. Now if they are cancelling the subscription, will they return this money what they have received? They haven't received the call money. They received application and allotment money from Mr. X. Now they have cancelled his subscription. Cancelled the subscription is equivalent to rejecting the applications. Applications we reject at the very first stage, we cancel the subscriptions in between. Clear? So now that we have cancelled the subscription of Mr. X, now what do you think? Will the company return whatever amount they have received to Mr. X? What will happen now? You treated the amount received as share capital. You have shown that amount into share capital. But now you have cancelled the subscription. You can no longer show this amount as share capital. What will you do? In this case, what is happening is we are not returning the amount to the defaulting person. But what is the first step? You treated this amount as your share capital. See, you transferred share application to share capital. Here, share allotment to share capital. So that means your share capital is appearing in the books at 30 plus 20, 50,000. 50,000 rupees you have received in your pocket, and you have treated those 50,000 rupees as your share capital. But now that you are cancelling the subscription, you will cancel this share capital. So what will be the effects of this? Let us write down. Number 1, our share capital will reduce, right? This means share capital account will be debited. Now, with what amount the share capital account will be debited is a very big question now. Right? Amount is equal to number of shares multiplied by amount called up by the company. Right? In this case, how many shares are there? 10,000. And what is the amount that has been called by the company? Just focus on the word called by the company. That is important. Called by the company. That is why I have given this, that second call has not been made by the company. So how much the company has called? The company has called for 8 rupees only. Leave what is not paid. Just first think what has been called by the company. What has been called by the company? The word here important is called by the company. So in this case, the second call of rupees 2 has not been called by this company. So how much rupees they have called? On 10,000 shares, they have called for only 8 rupees. So rupees 80,000 will be the share capital account will be debited with rupees 80,000. Remember this amount called up by the company. Because we cannot reverse the amount that has not been called by the company. Even see the journal entries. Share capital 30,000, share capital 20,000 and share capital 30,000, 80,000. Second call has not been made. We cannot make this due. Right? So this is what we are doing. 80,000. Number of shares multiplied by amount that has been called by the company. So this is one thing, that is share capital. Our share capital will reduce. Share capital account will be debited. What will be the amount? Number of shares multiplied by amount called up by the company. Right? Now, second account. Now, whatever amount has been received, do you think the company is going to return that amount to Mr. X because we have cancelled his subscription? No. The company will not return the amount that has been received. Write this down. Company will not return amount received on application and allotment to Mr. X. Right? This much is clear. Company is not going to return that amount because it is the fault of Mr. X. He defaulted. Because of his default, the company first gave the notice. Even after that, he is not paying. It is his default. We are not going to return whatever amount we have received on application and allotment from Mr. X. We are not going to return that amount. Then what we are going to do with that amount? Right? We will transfer that amount to an account called forfeiture account. Clear? To an account called forfeiture account. So Mr. X defaulted, then whatever money we have received from Mr. X, we are not going to return that money to Mr. X. Instead, what we are going to do, we will transfer that money to an account called forfeiture account. Clear? So what will be the amount in the forfeiture account? Whatever you have received, the calls that you have received, amount is equal to number of shares into money received. Now, can you tell me the number of shares? 10,000. How much money has been received by the company? See, application 3 rupees received, allotment 2 rupees received, first call 3 rupees not received. So whatever has been received will be transferred to forfeiture account. What is the important word here? What amount has been received? The word received is important. So what is the amount received? Application and allotment, that is rupees 5 has been received by the company. 50,000. So this 50,000 will be transferred to an account known as forfeiture account. Clear, friends? So two things are clear. One is our share capital will reduce. Share capital account will be debited. It will be debited with the amount that has been called up by the company. Clear? Second is the company is not going to return the amount that has been received by the company from Mr. X, that is received on application and allotment. Instead, we are going to transfer that amount to a separate account that is known as forfeiture account. And this account will be credited with the amount that has been received by the company. Right? Now, these two things are clear. Moving on to the third thing. See, here we opened this calls in arrears account. This share first call account is closed. Share capital is closed. Deal with. Bank has been dealt with. What is left? Calls in arrears. What are we going to do with this account? We are going to close this calls in arrears account. Why? Because we are not going to receive that money. So why to keep that account open when we have cancelled the subscription? We know we are not going to receive that money. Then what is the fun of showing the calls in arrears account? The calls are no more in arrears. So I will say the calls in arrears account will be closed. Right? How it will be closed? It will be credited. With what amount it will be credited? It will be credited with number of shares multiplied by amount not paid. Clear? How many shares? 10,000 shares. On 10,000 shares, the first call money of rupees 3 has not been paid. So I can say 3 rupees. That is 30,000. Verify with this. Calls in arrears 30,000. Clear? Why we are closing the calls in arrears account? Because the subscription has been cancelled and the calls are no more in arrears now. We know that we are not going to get calls from Mr. X now. We have cancelled the subscription. Right? So can you pass the journal entry now? There are three things. Share capital will be affected. There will be a forfeiture account. And the third will be the close of calls in arrears account. Now what will happen if you are not opening the calls in arrears account? Right? If you are not opening the calls in arrears account, then your pending calls will be there in share first call account. In that case, you will close this account, right? Or calls in arrears, right? Now, what is our journal entry? Let us pass the journal entry for forfeiture. The journal entry is share capital. Share capital is debited because we are closing. Our share capital will reduce with what amount? See here, number of shares multiplied by amount called up by the company, 80,000. Right? Now, to share forfeiture account. This account will contain all the amounts that have been received by the company. That is 50,000 rupees. Right? And to calls in arrears account. This calls in arrears can be substituted by share first call. If you are not opening the calls in arrears account, that means you are following method 1 of calls in arrears, right? Then you will write share first call account, okay? Otherwise, you will write calls in arrears account, the amount which was not received and due to which the forfeiture has been done. This comes to 30,000. So this is the journal entry for forfeiture of shares. This is the basic concept of forfeiture. That is, the person fails to pay the call money. The company gives a notice of 14 days to the person. Person still fails to pay the call money within 14 days. Then what will be the company doing? Company will cancel the subscription of shares for that person. Right? Company will cancel the subscription of that person. And what are the effects of cancellation? The first effect is on share capital. Our share capital will reduce. The share capital account will be debited. Right? When we are increasing the share capital, our share capital account is credited. Now the share capital will reduce. Clear? Now, what will be the amount? It will be number of shares multiplied by amount that has been called up by the company. Remember these important words. Here, called up by the company. This is very important. Clear? Then what will be the company doing with the amount that has been received by the company? That amount will be transferred to a separate account that is known as forfeiture account. Here the word important is amount that has been received by the company. Clear? Then the third step is we have to close the calls in arrears account also, because this call is no more in arrears. The subscription has been cancelled. We know we are not going to receive this call. So we will close this calls in arrears account or the share first call in case you are not opening the calls in arrears account. Clear? So this is just the very basics of forfeiture of shares. If you have understood this clearly, then the further topics will be easy for you. Clear? Now, we'll end this lecture here, but before that, I'll tell you this forfeiture can be for two types of shares. That is, shares issued at par and shares issued at a premium. What does this mean? Originally, the shares were issued to Mr. X at par and those shares have been forfeited. The second case is the shares were issued to Mr. X at a premium and those shares have been forfeited. How to deal with this? This we are going to see in the next lectures, right? So friends, if you have any queries, just send me an email at ksjteaching@gmail.com, right? Now what we are going to do in the next lecture, we're going to discuss about forfeiture of shares originally issued at par. Originally issued at par. Clear? So this is what we are going to do in the next lecture. So that's all for this lecture, friends. Thank you so much.